Good morning, everyone. As folks are filing in, I'm just going to go through a little bit of a welcome and some housekeeping rules. My name is Ann Del Castillo, and I am the Senior Policy Advisor here at the Department of Cultural Affairs, leading the NYC Create in Place initiative. I'd like to thank everyone for attending this third and final presentation of the NYC Create in Place legal series, Becoming a Nonprofit, Incorporation, and Tax Exemption, presented in partnership with the Lawyers Alliance for New York. Before we officially kick off our program, we want to address some general housekeeping items. First of all, can you hear me? Let me see what this raised hand is about. Okay, looks like everyone can hear. Great. The automated closed captioning feature is also available for those who wish to use it. Video is enabled for speakers and panelists only. Participant mics will be muted throughout the webinar, and actually the raised hand feature was supposed to be disabled. If you are having issues, if you can submit through the chat. And then otherwise, for questions for the panelists, if you could submit those through the Q&A feature. We will begin the session with opening remarks and then presentations from each of our the Lawyers Alliance. After the presentation, we'll kick off the Q&A. Please note that this event will be recorded and posted on the DCLA YouTube channel and the NYC Create in Place Resource Hub. Finally, I wanted to alert you to a follow-up program we'll be doing on February 13th on creative fiscal sponsorship models with Thaddeus Squire of Social Impact Commons. The information about that session and the registration link will be posted in the chat. Finally, it is my pleasure to introduce Elizabeth Wytock from Lawyers Alliance for New York.
Thanks, Anne. I'm really happy to be here today. Hello, everyone. Thanks so much for joining. And definitely thanks to DCLA for having me. My name is Liz Wytock. I'm a staff attorney at Lawyers Alliance for New York. If you're not familiar with Lawyers Alliance, we are the leading provider of pro bono business and transactional legal services for nonprofits here in New York City. So we're the only legal service provider that solely focuses on nonprofit organizations. And I lead our community arts program area, meaning I am our sort of go-to person for our arts and culture nonprofit clients, which I love. Really wonderful work here at Lawyers Alliance. Check out our website. If you're interested in our pro bono service model, want to learn more about us. And I also will be referencing our website throughout the presentation, just because we have a wide variety of resources posted on our website that sort of drill down on some of the topics that I'll be mentioning here today. Okay, so first off, title page, my email is on the screen, and I really do encourage everyone to email me directly with questions. You can certainly input your questions in the Q&A function, and if we have time, we'll get to them at the end of the presentation. But there's a lot to cover here, and I know some of you may have questions pertaining to your own nonprofit ideas. And if that's the case, I'd be happy to talk to you offline. We can schedule a time to chat, go over everything in terms of your facts and circumstances. So just email me. Happy to chat. Okay. And also our resource call hotline number is on the screen. It's a service we offer to the community at large. If you ever have nonprofit related legal questions, you can just call us. We're here to talk. Okay. All right, let me get the slides moving along. Okay, here's my bio if you're interested. I'm a former tax attorney, now work with nonprofits, which again is I find very enjoyable and fulfilling. Quick disclaimer, have to say this. So today's presentation is informational only. It's not meant to constitute legal advice. And we'll be talking about both federal and state law today. Both federal and state law pertain to the formation of nonprofits, but we'll be focusing on New York state law, right? I'm a New York barred attorney, sponsored by the city, so we're focusing on New York. I'm sure most of you are based in New York. All right. Okay, so forming a nonprofit is a multi-step process, as you saw in the title of the presentation. It's called incorporation and tax exemption. Those are the two main steps to form a nonprofit: incorporating the entity in the eyes of the state, and filing for and receiving tax exemption in the eyes of the IRS. But there's some, steps you'll want to take at the front end and the back end just to make sure your, nonprofit is operating successfully. So let's start with planning. All right, so when you think you may want to start a nonprofit, there's some things to consider. So forming a full-fledged nonprofit with tax exemption, so that means forming a corporation in New York State. It's a bureaucratic process, as you will see. Will be the bulk of my presentation today. But there are some options for corporate form reform before you sort of take that step to form a new nonprofit entity. So I'll just go through each here with a hypothetical. So say a few friends and I want to start a jazz trio. We're just starting out, we're jazz musicians, we get a few gigs here and there. Any money we earn from those gigs, probably just we report it on our individual tax returns. No one really wants to donate to us yet. So at that point in sort of this forming a group process here, I don't think I would really necessarily want to form a new nonprofit just yet. There's no incentive to. Why would I form a new business entity when we're just sort of playing our jazz on the side of our day-to-day lives, right? So at that point, we might, operate as an unincorporated association, which is not a true legal form. It's just an informal group sort of going about doing charitable artistic activities. But say our jazz trio starts getting more gigs, and friends and family have expressed to me and my other members of the group that they want to donate to us and help us increase our profile, raise our profile, spread our performances, more performances, etc. So at that point, I may want to consider what is called a fiscal sponsorship, which I'll talk more about in the next slide. But this is essentially a means of borrowing the tax-exempt status of an existing nonprofit. So my donors get to take a charitable tax deduction, and I don't need to form a standalone nonprofit. So that might be a good option for organizations that are testing out their missions to see if they are truly viable and long-lasting. And then say my jazz trio really pops off, right? We get a lot of bookings. We have identified some grants from private foundation, other funders that we are very eligible for. Perhaps we want to start programming in the Boys and Girls Clubs for jazz education, or local schools or something like that. At that point, we have a viable model that is charitable. It's educational. We want to educate the public on jazz music, right? At that point, it might be a good idea to form a standalone nonprofit. So that just sort of gives you the calculus when it comes to determining how to form your organization. And we're going to talk a lot more about corporations in the slides to come. Okay, so I mentioned, a little bit about fiscal sponsorship, and I just wanted to highlight something Anne said. There's going to be a Create in Place webinar on fiscal sponsorship on February 13th. But as I mentioned, fiscal sponsorship is a way for groups that don't have their own tax exemption to essentially borrow the tax exemption of an already existing nonprofit. That existing nonprofit will take in donations on, say, my jazz group's behalf, and disperse those donations to me. And then my jazz group generally would pay a fee to that fiscal sponsor. And there's some other legal considerations tied to fiscal sponsorship. Check out the Lawyers Alliance website. We have a lot of materials on fiscal sponsorship. But again, it is a great way to test out a mission like an arts mission, a charitable mission, before going through the steps, of which there are many, to form a nonprofit. All right. So let's move on to incorporation. Just before we talk about the incorporation process, just a little bit, a few notes on the corporate form. So, generally, there are many advantages to forming a corporation and then, filing for tax exemption thereafter. Directors, officers, employees have limited liability, meaning they, any claims against the organization cannot be tied directly to the individuals. You can receive tax exemption once you form a corporation, and corporations have perpetual existence. The disadvantages, I think what's key to a lot of new nonprofits is that there's not a lot of control for founders of organizations because corporations are governed by a board of directors. So just keep that in mind. If you are really dedicated to forming a new organization and you want complete control over the nonprofit, that's not really what nonprofits are made for, because they are controlled and owned by the community at large, not an individual person. And thus they are governed by a board of directors. So just keep that in mind. And, again, as you'll see, it's a time-consuming process. I'll discuss this in just a moment. To form a corporation, it doesn't automatically generate revenue. Just because you are formed an entity doesn't mean the donations start flowing. There's, work to be done for fundraising. And once you form an organization, there is a dissolution process that is quite lengthy when you want to close up shop, which is why I mentioned fiscal sponsorship earlier, right? Like, that is a way to test out a mission without going through all of this. But if you form a corporation and then want to just, close the door on that, it can take a lot of time to formally dissolve the entity. All right. Let's get into the details regarding incorporation. So perhaps you've gone through the planning process and now you want to form a standalone nonprofit organization. So as I mentioned earlier, the first official step is incorporation, bringing the corporate entity into existence in the eyes of the state, here in New York State. And you do that by filing a certificate of incorporation with the Department of State. You form a charitable corporation under the New York Not-for-Profit Corporation Law, which is a state law governing nonprofits in New York. So it's a specific form of corporate entity, a charitable corporation here in New York State. The certificate itself is pretty short. You don't have a lot of info that you need to fill in when you file the certificate of incorporation. Sort of the main points are stating your charitable purpose. So the mission of the organization, the types of activities that the organization will be held to when it operates, in years to come. You also need to list 3 initial board members, at least 3 initial board members that will serve on the organization's board of directors. There's some other info to include in the certificate, including IRS required language, where you attest to certain IRS nonprofit rules in the certificate. This information is included on the IRS website. Any questions about that, just let me know offline. All right, so as I mentioned, filing the certificate with the Department of State and sort of getting that approved, bringing the corporate entity into existence, it's a fairly short process in and of itself, but there are some follow-up steps needed before you can go ahead and file for tax exemption. One being, you're going to obtain an employer identification number from the IRS for your new corporate entity. Getting an EIN from the IRS allows you to open up a bank account in the name of the new organization, which is very appealing to people, right? You want everything in the name of the new nonprofit rather than your own individual name, for example. You also need your EIN before you file for tax exemption. Getting an EIN is pretty easy. You can do so filing an Form SS4 online on the IRS's website. You get it generated and sort of spat back out to you in like 10 minutes. Quick form. All right, there's a note here regarding tax return filing and EINs. I will touch on that in a few slides to come towards the end of the presentation. Okay, so you've formed your corporate entity, you have your EIN. Now it's time to draft your corporate bylaws, which are a set of rules and procedures for operations of the board. So it's like a guide for the board of directors on how to govern the organization, how to elect new members, how long are board terms, how many board members should there be on the board at any given time, what is quorum, how often does the board meet, things like that. It can seem a little legally intimidating, the bylaws, because New York law does govern what needs to be included in the bylaws. But it's meant to be a flexible, usable document by the board to ensure the board is governing the organization in the best way possible, aligning with New York law. So it's a very handy document, and oftentimes, or we would, ideally, encourage organizations to work with counsel to draft this document, again, because New York law does govern what should be contained in it. Similarly, another governance policy required by New York law is the conflict of interest policy, which is very important for the board, guides the board on how to handle potential insider transactions. So at the heart, again, New York law governs on what needs to be included in the conflict of interest policy, but it guides the board on how to handle what is called related party transactions. Let me just give you a hypothetical to explain it better. So say I am sitting on the board of an organization. That organization wants to hire a caterer for a gala. And that caterer that they're considering is owned by my sister. So I have a conflict, right? Like, because my sister knows me and I'm on the board, like I could benefit her and get her this contract. So in that situation, what I would do, I'd follow my conflict of interest policy. I would raise the conflict for my fellow board members. I would recuse myself from any decisions regarding that catering transaction, the catering contract. And then the board should review the potential catering deal with my sister's catering company and ensure that it's in the best interest of the nonprofit before moving forward with that contract. Like, it is still, these types of insider transactions are still allowed. They're not outright banned by the law, but the board needs to make sure that at the heart of the transaction, it's in the best interest of the nonprofit and reasonable in nature. So that's really what a conflict of interest policy does. It guides the board through those types of transactions. Okay, so after all the steps I've just mentioned, the board will meet, those 3 initial board members that were named on the certificate of incorporation, any other board members that have since joined, they'll meet. They'll adopt the bylaws, they'll adopt the conflict of interest policy, and just handle initial, business decisions. Just a quick note on governance. So the board can act over email, can consent to decisions over email, as long as every board member agrees to that decision, in writing over email. So if there's a dissenter or someone just does not participate in that vote, you cannot have a certain transaction or decision approved over email. It must be in a scenario where every board member can communicate with each other in open dialogue. That's just a rule of New York, nonprofit law. Okay, so moving on to tax exemption. I'm mindful of the time here. As I mentioned, there's a lot to cover. Okay, so everything I mentioned up till now, forming the new entity, that is a matter of state law, of New York state law. Now we're going to switch gears and largely talk about federal nonprofit law. So here is a quick little diagram of the process here, but I'm going to break it all down for you. Okay, so the technical term for a nonprofit is not a word used in the tax code, actually. It's just sort of a term just commonly used in the US, but the true legal term is a tax-exempt entity under IRC, Internal Revenue Code 501c3, specifically a public charity. That's what you and I, when we say nonprofit, like that's what we're thinking, a C3 tax-exempt public charity. It's the most common form of tax exemption in the US. That is because C3 organizations, in addition, they don't have to pay tax, but their donors get to take that charitable tax deduction. So it incentivizes donations to these types of entities. But only certain types of organizations with certain types of missions get to receive this special tax-exempt status. And those are organizations that are organized and operated exclusively for charitable, religious, educational, scientific, literary purposes. You'll see this first bullet point is copy and pasted directly from the tax code. So essentially, these organizations need to prove to the IRS that they are charitable in nature, educational in nature, etc., to receive tax exemption. And I'll just note, you'll see in this first bullet point, there's no specific call out for arts groups or any organizations with arts focus areas. That is because arts nonprofits qualify for tax exemption because they are educational in nature, right? So like my jazz group, we want to educate the community, the New York City community, on the music of jazz. Or a ceramic studio would qualify for tax exemption because they're educating the community on this art form of ceramics, right? So that is how arts groups qualify for tax exemption. There are a number of IRS rules pertaining to nonprofits, limitations on certain programs and operations. Sorry. First is tied to the conflict of interest policy that I mentioned a few slides ago. So nonprofits under 501c3 must serve the public at large rather than benefiting any private individual or company. This is what I mentioned earlier, nonprofits are owned by the community at large. And I think this is where the term nonprofit really comes from, because C3 entities can earn profit, that's allowed. But any profit revenue earned must go back into the organization and further, the organization's mission rather than going into the pockets of any private individual. So I think that's where the term got popularized from. But organizations meet this requirement largely by following that conflict of interest policy. That is the safeguard for ensuring this requirement is met. Generally speaking, C3 organizations should expect to receive revenue sources from a wide range of sources. You don't want to receive revenue, say, from one person. Like you don't want just one large grant from one person, because if you do, your organization may be qualified as a private foundation, which is just subject to a stricter, set of IRS rules, just given the fact that private foundations, like the Gates Foundation or whatever, right, they're funded by one individual, a family, and those individuals get large tax breaks. So the IRS has stricter rules for those types of organizations. So just keep that in mind when considering your funding sources. And then C3 organizations cannot engage in any type of partisan political activity. So no electioneering, no campaigning for any candidate or existing person in office. It's an outright ban on partisan political activity. And C3 orgs can only engage in limited amounts of lobbying, meaning supporting or opposing existing or proposed legislation at the city, state, or federal level. So we have a lot of lobbying info on our website. check it out. We have webinars quite frequently on lobbying as well. Again, it's not an outright ban on lobbying for C3s, but there are restrictions. So just keep that in mind. That relates to your mission idea. All right, let's get to the form itself. So the form for tax exemption, for filing for tax exemption with the IRS, is the Form 1023. It's pretty long. It's about 40 pages in length. A lot of the info requested focuses on, you describing the mission of the organization, writing a narrative description of the programs that you plan to carry out, essentially painting the picture for the IRS that your organization deserves to qualify for tax exemption. I also ask for, budget information, proposed budget information, things like that. Provide as much detail as possible. Always a good tip. In terms of filing the form itself, some logistic items must be filed online on pay.gov. The fee is $600, and it's sort of a get ready to wait game as it stands. Currently, the wait time to hear back from the IRS once the form is filed, 8 to 9 months. So you'll see here, as of a few days ago, the IRS was reviewing applications from June. So it's a bit of a waiting game. However, the good news is, as long as you file for tax exemption within 27 months of incorporating in New York State, tax exemption is retroactive to the date of incorporation. So any money earned during that waiting time, you should not have to pay tax on it. So the good news is that there is a short form 1023, a streamlined form called the 1023-EZ, available to smaller startup grassroots organizations. Also file online, it's cheaper, it's only $275, and you hear back from the IRS really quickly, within 3 weeks, typically. But it's only available for certain types of organizations, specifically those who have received less than 50K in revenue each year for the past 3 years. If they've been operating, they project to receive less than 50K each year for the next 3 years. They don't have any assets that are high in value, like real estate. So if your organization qualifies for the EZ, highly recommend filing it. The outcome is the same as filing the longer form, C3 tax exempt status. That second bullet point is key here, that projection of your revenue over the next 3 years. It's all about reasonable projection of revenue at the time of filing. So say, I would ideally like to receive more than 50K each year, but I don't have any identified grants. I really don't know where my funding will come from. I think you'd likely qualify for the EZ. And then say in year 2, I luck out and I get a Mackenzie Scott grant out of the blue for $100,000. Currently, there's no IRS authority that states that I would need to go back and amend my EZ filing or refile the 1023 long form. So I just sort of luck out in that scenario. So do consider the 1023 EZ if your organization is, the smaller size startup nonprofit. Okay, no, we're right at time, so I'll try to blow through the next couple slides. If you can stay, great. So everything I mentioned for tax exemption up until now, the past couple of slides, that was at the federal level for federal tax exemption. But we want to make sure your new nonprofit doesn't have to pay state or local tax as well. So there are some much simpler forms to file for those exemptions once you receive your federal tax exempt status. And you will also need to register the organization with the New York State Attorney General's Charities Bureau before soliciting contributions in New York State. And that's a fairly straightforward online process on the Charities Bureau's website. Okay, so I think like up until now, I would say like if you've gone through these steps, you've formed a nonprofit. Congratulations, it is up and running, like, and you've done what you needed to do. However, at that point, you don't get to say goodbye to the IRS and like never have to deal with them again, unfortunately. Just like you and I, file tax returns every year, nonprofit organizations, C3 public charities need to do so as well. And there's state filing obligations too. So we'll go through each very quickly. At the state level, or sorry, at the federal level, the IRS tax return for nonprofits is called the Form 990. Due every year, around 4.5 months after the organization's fiscal year. 990s are made public, posted online on the IRS website and sites like GuideStar. Again, nonprofits serve the community at large, so this is all in the name of transparency and accountability. This sort of bold bullet point here is important. Your organization needs to file its 990 every year, and if it doesn't do so for 3 years, the IRS will automatically revoke your tax exemption. Just pull it, and you'll need to refile if that happens. There's a weird quirk in sort of the steps here. So I know I mentioned that you can get your EIN as soon as you form your corporate entity in New York State. But once you file for and receive your EIN, your entity exists in the eyes of the IRS, and that actually sets the clock for filing your 990, not filing for tax exemption, which is a little weird because sometimes you can get your EIN and then something happens and you don't file for tax exemption for a year or a number of months, whatever, you'll still need to file your 990. And there's a checkbox on the 990 where you can say, C3 status is pending. And just like the 1023, there are different types of 990s depending on the revenue generated by the organization in the given tax year. You don't, under 50K in that tax year, you get to file a very short 990, the 990N e-postcard return. It's only about 5 questions, super easy. And then it sort of gets a little bit more complex, from there, you need to provide more info to the IRS. Once your organization starts earning, say over 200K a year, likely a good idea to hire an accountant to help with your 990 filing. So just keep that in mind for budgeting purposes in the future. And at the state level, the Charities Bureau requires the nonprofits to file what is called the CHAR 500 annual report, CHAR standing for charities, due around the same time as your 990, also posted online on the Charities Bureau's website. And just like the 990, the more revenue your organization earns, the more information you will need to supply to the Charities Bureau. So organizations that receive over $250,000 in a given year will need to start engaging auditors. The board will have to hire an auditing firm, and you'll have to file an audit report with the Charities Bureau. Okay, last slide. So I just like noting this because it's important for organizations to remember that just because you have C3 status, you're tax exempt, doesn't mean you definitely don't have to pay tax. If your organization starts engaging in a trade or business regularly, that is not substantially related to the organization's mission, it may need to pay tax, corporate tax, on that money generated from said trade or business. So this is, I think, best illustrated with a case example. One of my favorite cases that I studied in law school had to do with NYU School of Law, so local. A wealthy NYU alum donated a macaroni factory to the law school. NYU said, "Thank you very much," and started making macaroni, selling macaroni and generating revenue from pasta sales. It did not pay tax on that revenue earned from the macaroni sales. Caught the eye of the IRS. The IRS was like, "What is going on here? Like, excuse me, you owed us tax on the macaroni sales, because I do not think, like you cannot argue that macaroni sales is in furtherance of NYU's mission of educating, the youth of America or whatever. So they brought suit in tax court claiming back tax owed on the money generated from the macaroni factory. The court actually ruled in favor of NYU because at that point, the tax code did not include this type of provision requiring, tax paid on money generated from unrelated, business operations. So it ruled in favor of NYU, but that same year, Congress amended the tax code to include these provisions on unrelated business income tax for nonprofits. So I tell this story not because I think your organizations are going to be donated a macaroni factory, but because this can become relevant for smaller nonprofits when they sell merchandise, or perhaps like your organization will want to open a cafe next to its theater space or something like that. That can potentially trigger UBIT. So just something to keep in mind. You can always talk to me or other counsel down the line if this becomes relevant for you. Okay, I need to chug some water because I've been talking for almost 40 minutes straight. But here's a quick summary of everything I've discussed today. And I think, for folks still online, happy to answer some questions. But as I mentioned earlier, please email me. I'm happy to talk with you offline at a time of your choosing regarding your own circumstances. We can go over this or any questions you have. Just email me.
Thanks so
Thank you
much.
so much.
Thank you, Elizabeth. There are a couple of questions that
Great.
might be helpful to answer here. And then, yes, just a reminder to folks, if we don't get to your question, Elizabeth's email is in the chat. And so we're happy to do more direct follow-up after. We're preserving the Q&A, and so we'll try to follow up with folks. But one of the questions is it true that being an arts company alone is not a charitable purpose, that there needs to be a community/education component, for example?
Yeah, that's a great question. I think, it depends on that art company's programming. Should they have programming, across the city that is open to the public? Maybe there's a pay what you will option, or free options for community members. I think you could certainly make the argument that that is an educational mission. You're educating the public, on your art form. You don't necessarily need to have like school programming for it to be educational in nature. So I think there's certainly a way for you to argue that just, your arts group can receive tax exempt status without that like extra sort of community-based focus area.
Great. Another question, could you briefly also mention the benefits of what would be relevant options for creative groups or larger alliances of creative groups to incorporate as other status, C6, C5 for labor, C6 business leagues?
Yeah, so I need to preface, like, I am a nonprofit attorney, but only work with C3s. So I do not have experience working with social clubs, other C entities. But I just want to emphasize something I mentioned earlier, that C3 organizations, the donors get to take that charitable tax deduction, which incentivizes, fundraising donations to the org. And when you are looking for grants in the art space, grantors are largely going to focus their grant making on C3 organizations. So just consider your revenue generation and budgeting plans. If you're thinking of going like be a C6, you may not be able to rely as much on outside funding.
There's actually a very timely question here with regard to new federal policies revoking tax exempt status without due process review. Just, it's kind of a big question, but if there's an initial thought you could share on that.
Oh, the law is changing consistently. I would say just keep an eye on our website. We are certainly trying to stay on top of the various executive orders being thrown around. Currently, as it stands, I believe the bill you were that was referenced. I don't see the question myself, so I can't say for sure, but that was part of a proposed legislation that I think was rejected or removed. So as it stands, that is not law right now. I can't really opine more on that other than just
That
keep
makes
an eye
sense.
on our on our website and information we publish, because we are certainly keeping an ear to the ground when it comes to federal discourse in the nonprofit realm.
There's two related questions. One of them is like, can you function as a 501c3 while waiting? I think the answer is no, but I'll defer to you, Elizabeth, to answer that. And then there's a related question is, if you have an existing LLC, is it possible to transition to becoming a 501c3, or is it better to start from scratch?
Yeah, okay. So can you function as a C3 while waiting? Um, So I think what you mean is, can you like carry on your operations, your activities and programming while waiting for tax exemption from, your letter from the IRS confirming your C3 status? You can, but you need to be transparent to donors that your C3 status is pending. That's key. So you cannot tell your donors if you have C3 status if you do not. That's certainly the most important point there. And regarding the LLC, transitioning an LLC to a nonprofit. So actually, in New York State, LLCs are formed for business purposes, meaning not charitable purposes. So you have to form a new not-for-profit charitable corporation, and sort of transfer assets from the LLC to the new corporation, and then perhaps dissolve the LLC or keep it around or whatever you want to do, but you do have to quote unquote start from scratch by forming a new corporate entity in New York State.
Right. And then we'll just do one more because I know you have, we have a hard stop at 12:45. Does limitation of liability for directors' officers come as a matter of law, or does the organization need to purchase insurance coverage to achieve that?
Yeah, it is best. So it does come as a matter of law, but it's always best practice to purchase directors and officers insurance as well. I think that oftentimes will incentivize, new potential board members to join the board. And there are always carve outs for that. Say if board members act fraudulently, or some behavior in their own capacity causes some issue or claim. So it's not a full cover of limited liability. There are some exceptions.
Great.
And I do, and I see a
Yeah.
few quick questions that I can just bang
Oh,
out.
great. Perfect. Go ahead.
Okay, so can corporation leadership be amongst the 3 initial board members? They can. That is fine. Just be aware that, when an employee or someone like corporate leadership is on the board, they will frequently need to recuse themselves for certain decisions, say like setting salary for themselves. They're an insider, right? So they won't be able to engage as much as an independent board member, meaning a board member who doesn't have direct ties or receive money, salary from the nonprofit. Do all board members have to be US residents? No, that is not a rule. Let's see. Let me see if there's any other quick questions. Okay, and some I think, went through quickly on the slides. I believe the slides will be shared after the presentation.
Yes, they will be.
Yeah, awesome. And if I didn't get to your question, just email me and we'll talk.
Okay. Elizabeth, thank you so much. Thank you and the Lawyers Alliance for New York for partnering with us to present this. I've put Elizabeth's email in the chat along with a link to the next webinar on creative fiscal sponsorship models. And yes, we will be sharing the slides and this presentation in a couple of weeks once we get all of the series posted to the website. So if you're registered for this, you will definitely get those materials. Thank you all for attending and have a great week.